vast majority of clients have an insurance policy of some sort. What are the different kinds of policy, and what should John Citizen, John Doe, know about his policy?
The deductibles on your property insurance change. Deductible is calculated by 2% of your policy value. You're paying crazy amount for your policy. You're getting less because most of the time they're only allowing you to get the 5% deductible.
How do we educate the public that there's something wrong with this concept and with what's going on?
Why am I paying out of pocket more money to the association when the association should be insured? I'm Tom Morgan, Trial and Error. Today we're going to be talking about property insurance and understanding your policy.
The vast majority of clients have an insurance policy of some sort. It's understanding that policy, because there's a difference between the property policy or homeowner's policy they have on their house and the automobile policy that they have for liability and property that's on their automobile. What are the different kinds of policies, and what should John Citizen, John Doe, know about his policy?
Most people, unless you've gone through a claim on your home, most people probably in most cases have only dealt with an insurance claim on maybe their vehicle or something to do with their automobile. In that instance, people say, well, I have this coverage or that. The only time you really deal with what your limits are is if your own vehicle has been damaged, you need to take it to the body shop, you want to get it fixed, and the carrier tells you, you have a deductible you got to pay, and then your insurance will cover the rest of it and so forth. On a property case, you have a deductible, same thing, because you're insured to get your home repaired and fixed, you've got to pay deductible. So it's important, first and foremost, when you look at your policy, understand what your deductible is.
Well, on my auto policy, I have because it's an expensive car, I have $1,000 deductible, which means I know I have to pay the first $1,000 of property damage. So if I have a $1,200 property claim, I'm not going to bother. I'm going to just pay it myself because it's not worth the hassle of the paperwork for $200. Well, isn't that the same thing when I have a $5,000 or $10,000 deductible on my home and I have a $50,000, $25,000 claim?
Well, property, the aspect of it is that you have coverage for X amount, which is supposed to be what it's going to cost you to rebuild your home. The deductibles on your property insurance change. So good.
It says that it's $5,000. So doesn't that mean I pay the first $5,000?
It's going to be $5,000 for certain types of losses. It's also maybe a percentage if you're talking about having coverage for wind, hail, hurricane. So you need to understand most people now either have 2% or 3% or even a 5% deductible. And you say, well, okay, it doesn't sound like it's a lot.
Well, 2%, but that was the other thing. I thought that was a real bargain, because if I have a $50,000 claim, 2%, my God, $4,000. That's cheaper than having a $10,000 deductible. So the 2% and 3% I thought was in my favor. So if I have a $50,000 claim, aren't I better off with a 5% deductible than a $10,000 deductible?
You mathematically, in that instance, you will be. The problem is if you're making your claim for hurricane damage, it's more than likely you have a lot more damage than the $50,000. So what happens is your deductible is based on the amount of insurance coverage you actually have. So
$500,000.
So you have $500,000. So you're doing your 2% on the $500,000.
But I only have a $50,000 claim.
Right. So then that's when you say, how valuable is this policy to me if my standard type of claim is going to be $50,000 or $60,000 if my deductible, is going to be
if I have a 5% deductible on a $500,000 policy, that's $25,000 deductible.
So you've got to come out
and I have to pay that first off.
Out front. It gets paid.
So I'm better off with that $10,000 fixed deductible, because I would have saved $15,000.
100%. But those aren't offered anymore.
Who would ever think that it's of the? I thought it was 5% of the claim.
No.
So I thought that was a real benefit.
Well, the great thing is times have changed in regards to the policies, and most states are requiring that the policy, when it's issued to you, even though it has a percentage, has to say next to it how much that deductible really means. Because most people, when it was only a percentage, like you were saying, they're going, well, it's, I got to pay the first 2% of the claim, right? No, it's 2%. Deductible is calculated by 2% of your policy value.
And your policy value is what whatever you value the property for.
Well, whatever amount you've got
Yeah,
into.
so it's
in
all,
regards
so
to-
if you're insuring your house, you're probably insuring in Dade County something starting at probably almost $500,000,
Correct.
up to $1 million, $2 million, $3 million. So those percentages come astronomical.
They can be very astronomical, and that's what people are finding out now. You've got these multi-million-dollar homes along the water. The cost to insure those is incredible because those are the high-risk properties. You're paying crazy amount for your policy. You're getting less because most of the time they're only allowing you to get the 5% deductible because they don't want to provide a policy if it's less than that. You have a 5% deductible. You're paying high premium. And you're high risk, and so it's a question mark in regards to.
Would you say that the vast number of clients that ultimately come to you didn't know in the beginning that that's the way the deductible operated?
I would say 80% of the time, most people don't have any concept of what their deductible is. That's
incredible.
Most people, even for small claims, believe they have insurance. If their claim is a $20,000 claim, even if they have a $2,500 deductible, let's say on all risks outside of that, majority of people's perception is, I have insurance. That's what I pay for. I should be getting my $20,000. That's what my claim is. When their contractor says, you need to pay the first $2,500 for me to get started, or we explain to them, hey, we got you X amount recovered, you need to tack on the thought that extra $2,500 is there because that's where you're going to come out of pocket. Most people don't have a concept in advance of that.
Somebody who owns a $2.5 million house could have their roof damaged to the point where it has to be totally replaced, $275,000, and all of that could be eaten up in the deductible.
It does. And
That would be horrifying. I mean, you're paying all this premium. How do we educate the public that there's something wrong with this concept and with what's going on when people are paying for insurance and legitimate claims that they really don't have the pocket money to pay for are going by the wayside because they're falling within the deductible purview? And that's only one aspect of.
I think the education of the public is the big factor. There's always going to be a deductible. That's the nature
Agreed.
of policy. There's always going to be some sort of deductible. Having people understand what their deductible is and how it gets applied is, unfortunately, insurance brokers are not educating their clients about that or explaining to them how it works. We try to tell people in advance of the coming storm season and everything, review your policy, understand what it allows for, how it's applied. A broken pipe in your house has a different deductible than if you get hit by a hurricane or a tornado or a hailstorm. Also, the other thing is different deductible in regards to how you may have other coverages to your home. Then you go to a whole different dynamic of a policy. Person who lives in a condominium, they have a different style of policy because they're only insuring within their unit. The association that they're part of has a master policy, as we call it, that provides for the structure. That master policy may have a deductible that's hundreds of thousands of dollars. And so in a storm, we see this often, maybe you're a 2-building association or 3-building or more, and only a few of the buildings have been damaged. Do they equate to cover to go outside that deductible? What happens then is these people are getting special assessments and having to pay for those damages. And they don't understand why am I paying out of pocket more money to the association when the association should be insured? Well, the association is insured. There's deductible.
It kind of raises an association that I'm a member of, the building, it's a condominium, and they increased in renewing the policy, increased the value. And it went up $4 million, the total value. We looked at it from the standpoint of, well, I guess, is there some documentation that it will really cost $4 million more now than it did 3 years ago when it was appraised to rebuild the building? Well, nobody could come up with some great answers, but the building finally acceded to the fact that everything has gone up in value. They added on the extra $4 million. What they didn't realize was that they were adding on an extra $160,000 in deductible out of pocket that would not be covered if there was a claim. So the building may be worth $4 million more than it was 3 years earlier. The $400,000 deductible now has gone to a $560,000 deal. So in condominiums, there's a terrible catch-22 from the standpoint of, say, the board of directors, who needs to be sure that they have enough coverage to cover it because that's their duty. Otherwise, they're statutorily breaching their duty. On the other hand, they're raising the deductible to a limit where they can never afford it and would have to pass on a couple of $100,000 in assessments.
Yeah. We're doing cases now where they have 10 million, 14 million in coverage. Their deductible's $700,000, $800,000 on these commercial properties. Those clients clients, to them, they're saying, well, what do I do about that $700,000? Well, first of all, foremost, your insurance company almost always says your damages don't exceed it. So they don't want to pay you. But if you get to the lucky part where they are going to pay you something, the reality is you still have the responsibility to pay that initial amount. That's on them. Their policy, that's what they have agreed to, whether it's explained to them or not at the time that they took it out. But it becomes a big problem because majority of buildings, they passed a law in South Florida now for associations because they were so underfunded. They didn't have reserves. They're now requiring them to have reserves. Throughout the country, most associations have very minimal reserves. And so you're asking people to suddenly come out a lot of money that they don't have. If you're asking each homeowner to come up thousands of dollars.
I could see that from the insurance company or defense standpoint, that the deductible in and of itself is like a samurai's sword, just slashing away at what otherwise is a very substantial, legitimate claim that somebody has, is out of pocket to them, that they need repairs, assessing substantial amounts of money to people, in a condo that can't afford enormous assessments.
Well, and it gets bad when that association does not have the reserves and they're underfunded and they've been damaged significantly, and you have the unit owners themselves who have damage to their units because they've got to pay the deductible for their own personal damages.
So the whole thing starts all over again within the unit.
Right.
This is double indemnity the other way around.
They're paying their 2% or 3% deductible on their own personal, and then you get special assessed by the association to cover whatever that deductible is.
And this is just one aspect of the policy. I know there were a number of aspects of the policy that I wanted to try to cover. We didn't. I think we'd save them, and next time we get a chance to do a podcast, we'll see if we can touch on them.
Fair enough. We'll chat next time.